67-year-old couple. And let's first go over their existing assets and the cash flow and how wonderfully their life was under control with plenty of money coming in the front door as opposed to going out the back. So basically they have a paid-for home of $400,000. They have savings of $100,000 that they could use for travel, liquidity, emergencies, etc. I suggest leaving that alone. They have a brokerage account that they moved over to us. Now this would be your stocks, bonds, mutual funds. We put that with Schwab. It's completely liquid. It's set up to try to grow a little bit more, but there's $100,000 of after-tax money there. And finally, their 401k, which they had recently moved over to Tony Walker Financial in our split IRA concept, that was about $700,000 for us to manage. Keep in mind, folks, depending on what we do with the split IRA concept, the money that stays with Charles Schwab that we manage is a whopping 0.8%. That covers everything. That covers our fees to pick the funds for you, our distributions, our tax withholdings. That's everything, generally about half the industry average. And then finally, this was what was so cool. Between their Social Security, he also had a pension, and any savings they were taking out easily, okay, $6,500 a month. So they were basically able to live on the $6,500 a month. Most of this was after-tax money. Occasionally they might need some money out of savings, or we could send them money from the IRA without penalty, but their cash flow needs, the money going out the back door on a regular basis, again, they're going to spend more money than this for different things, but on a regular basis was about $6,500 a month. Social Security and pension pretty much covered everything. I'd pretty much call that worry-free. But that's okay. They came to me and they said, hey, Tony, we're looking at a home in Florida. We've always wanted to have a second home, okay? And it's around $500,000 that we're looking at. I said, okay, fine. My first question out of my mouth, and folks, this is what a retirement planning specialist does. I don't question why they're doing it. I'm going to start questioning from an economic standpoint, which was, how are you planning on paying for this? Well, they said, well, we thought about borrowing some money, but we didn't realize interest rates were that high. I mean, first of all, to borrow that money, you're not going to be able to borrow the full $500,000. You're probably going to have to liquidate your savings. So there goes your emergency account. Then you have to borrow money at 6 or 7% or whatever is going on. That's going to be a big old monthly payment. Cash flow, see what's going on here? More money going out the back door. We're not saying I'm opposed to this, but you got to start thinking about this. All right? Well, then they said, well, I tell you what we're thinking about doing, Tony. You're always talking about that darn tax tumor and these tax laws expiring in 2025. What if we took our entire $700,000, which it would take that much after taxes, what if we paid the taxes on that, which would net about $500,000, okay, and just paid for this Florida home with cash? Could we do that? And I said, well, of course you could do that if that's what you really wanted to do. Obviously, you could save the fees that we're charging on you, et cetera, but let's talk about cash flow. And they said, well, what cash flow? We're going to have this thing paid off. I said, you're not thinking about this home in Florida. So again, as we just got through discussing, homeowners insurance down there is about 4 times the national average. If you decide to be a Florida resident for tax purposes, you're going to have higher car insurance. You may be going to pay a property manager. Again, you've got all these issues with 2 homes. You've got maintenance. You've got all these expenses. So what's going to happen is what these folks were just not thinking of is the additional cash flow needed. Listen, even if they paid unpaid cash for it. So folks, the point with the Worry for Retirement, where we're so unique at Tony Walker Financial, number one, I've got a lot of experience in the world of retirement planning. I've been doing retirement planning specifically for over 20 years. I've met in person with nearly 20,000 people in that time. We have over 3,000 clients. I've overseen more than 5,000 written game plans. We know retirement planning. Folks, it's not always about the numbers and trying to grow your money and shuffling the stuff around like a deck of cards. It's all about cash flow. This is why we say cash flow is king.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.